Hello friends, today we are going to learn a new topic of financial market. This topic number 11. I have divided that topic in two lectures. In this lecture, we are learn about the meaning and functions of financial market. I myself, Paresh Sangvikar, BYK College of Commerce, Nasik. Let's see what is meant by financial market. The financial market. This concept is depend upon the two concepts: household investment and business firms. What is household investment? In an economy, there are some individuals, corporates, government, businessmen, etc. may have excess funds with them. So whenever they have a excess fund, they want to invest it. So they are called investors. On the other hand, some businessmen require the funds. So we can say that they are the borrowers of the firm, borrower of the market. So financial market is a act as a agent between the household investment person, means the investors, and the borrowers. The investor want to lend the money to the borrowers through financial market is called a financial market. Whenever we think about the market, we have ample of examples: fruit market, vegetable market, where the product will be purchased or sold. Same as per there, a financial market is a market where the financial assets or the instruments are purchased or sold, or we can say that it is exchange with money. Financial market are the document in the form of legal agreement between the two parties, so that it is a market where the financial securities are exchanged or commodities are exchanged at a low transaction cost. Definitely it is depend upon the supply and demand of the market, or supply and demand of the securities. Here the word security includes stocks, bonds, and commodities. Stocks, a bundle of shares; bonds, for number of years investment investor want to invest; commodities like agriculture goods. So financial market provide a different type of facility. For investment, they arrange the borrowers, and for borrowers, they arrange the investors. Let's see what are the functions of a financial market. Transfer of resources. This market facilitate the transfer of real economic resources from lenders to ultimate borrowers. It means that this market taken the investment from the person those who have excess money, and it should be given to the those organization who are in need. We can say that there is the borrowers. It means that the functions of financial market is transfer of resources from the investors to the borrowers, enhancing the income. Whenever investment want to invest the money, what is the object? To earn something. So financial market allow the investors to earn the interest or dividend on their investment or surplus funds. It contributes to increase the income of the individual. Automatically it is affected to the increase in national income. Capital formation. Financial market provide the channel through which a new saving of the investors flow in the country. Before the financial market, there is only one investment in front of the investors is only the bank FD. Nowadays, capital financial market provide a channel, create one platform for the investor to invest the money into the different types of securities. For example, XYZ company required the money. They want to enhance their organization or maybe for new product. It doesn't have such fund. On the other hand, there are some investor who want to invest their money where they can get a more rate of interest. It means that the expectation is to earn the interest. In that case, the financial market will function where the company can raise the funds from the investors, and investors can invest their money through the help of financial market. Here the main functions of the financial market to increase the capital. How it is increase the capital? To attract the customers, to attract the investors. If investors are ready to invest their money into the financial product, it is very easy for the financial market to borrow to given to the borrowers. Reduction in transaction cost. Transaction cost is depend upon the mode of transaction. In the financial market, the mode of transaction is definitely online basis. Here the trader require very much information or very various types of information while doing the transaction of buying and selling of securities. Investor must know that where we have to invest, what is the rate of interest, when it will be renewed, how they will give the interest, what is the term, what are the agreement, all this information. This information is provided by the financial market because they have a such type of information kept with them. Without spending a money, without delay in time, they can give the information. In this way, the financial market reduce the cost of transaction. Productive uses. The financial market allow for the productive use of funds borrowed. Whatever the organization taken a loan from the investors, their definitely main motive or use is to use that amount in production process. It may be for increasing of production, it may be in enhance of income, it may be for development of the organization. On the effect of that, the income of the organization will be increased and automatically it is affected the national production. Determination. The financial market perform very important functions of price determination, which are traded between the buyer and seller on the financial market. The prices at which the financial instrument trade in financial market are determined by the market forces, that is demand and supply of the market. We know that in every market or in any market, the price of the product is depend upon the supply and demand. Whenever demand is more and supply is less, definitely the price of the product will be increase. So in that financial market, what is the product? Shares are the product, bonds are the product, debentures are the product, commercial papers are the product. These are the instrument. So it is depend upon the how many borrowers are ready to taken the loan. It means that rate of interest, rate of dividend. So that the financial market provides the vehicle by which the prices are set for the both financial assets. Here, there are both financial asset means a newly introduced and also for existing stock of financial assets. Mobilizing of funds. What is mean by mobilizing? The funds in the hands of investors can be productively used by the corporate. It means that funds are transferred from investors to the borrower. It is called mobilize. Along with the price determination of the price at which the financial instrument trade in the financial market, the required return out of the fund invested by the investor is also determined by participant in the financial market. It is the motivation for the person seeking the funds is depend on the required rate of return which is demanded by the investors. It means that even though the investors wants a more and more rate of interest or dividend, it is again depend upon the demand of the investment. If demand is more, there are number of borrowers in the market, they require the money, then definitely rate of interest or dividend will be high, and vice versa concept, the rate will be low. Because of this function, the financial market only, it is a signal how funds which available from the lenders or the investors of the funds will be transferred to the person who is in need. So, the financial market helps in the mobilizing of the saving of investors. It means that the financial market helps to transfer the funds from investors to the borrowers. This is one of the most important functions of financial market. Liquidity. In the 11th also, we have learned the joint stock company. In the features, liquidity is one of the most important features of joint stock company. What is liquidity? Liquidity means whatever commodity, it should be converted into cash immediately. It is called the liquidity. This function is provided by the financial market. If one of the investors have purchased the instrument, and after some days, if they require the money, they can easily sell into the market and convert that instrument into cash immediately. Again, it is depend upon the demand and supply. It is again depend upon the market situation. If the market situation is high, definitely the investor will get a fair value of their instrument. And if there is vice versa concept of the market, the investor has to be forcefully, the investor has to be forcefully have to hold the financial security up to the market will be increase. That is, there are some liquidation process of a company. At the time of liquidation of the company, the equity instrument is until to the companies voluntarily or liquidated, involuntary liquidated. It means that as and when company cannot accept a liquidation, this is the condition only for the liquidation of the company. Otherwise, liquidity can be easily, instrument can be easily converted into cash. Easy access. Nowadays, all this process of financial market is going on an online basis. It means that the industry requires the investment and investor require the industries for earning a return. So that that particular financial market create a platform for the potential of buyer and seller easily. It helps them in saving their time and money in finding the potential buyer and seller. It is very easy access. If the investor, if there suppose there is no financial market, is it possible that investors can identify the organization or borrowers easily? No. industrial development. The financial market helps in transforming saving into capital that corporate use the funds of investors to undertake the productivity and commercial activity. It increased the employment growth of both organized and unorganized sector. As the result, the industry and the business operation increases rapidly. The employment opportunities open for more sectors such as sales, marketing, advertisement, and so on. So, this is due to the financial market services. Thank you very much.